Good afternoon, ladies and gentlemen. Um, yeah, I just wanted to share a little thing. It's kind of ironic that 821 is a big expiry. You know why? Because Kitty last played June 21, right? And he bought those very short dated, right? Remember, it was May 13th, and he bought June 21 calls. Seems very familiar. He bought them right ahead of the squeeze, and you remember the 5,000 blocks that came through and all that, blah, blah, blah. He bought 120,000 call contracts. You know how much that is in comparison to open interest? Well, it's usually about 6 months worth of call options for a stock, for AMC or GME. 6 months in one morning, right? So 120,000, June 21st. Remember those numbers? Let's go over and look at this one. Okay, so for not June 21st, but 8/21, there's not 120,000. There's 354,000 in open interest. 354. Now, if you use charts and you claim like, oh, I know how to do charts and I'm a fractal guy, and you look at this and you have a brain on your shoulders and you look over here and you say, is this going to run like next week or this week? Well, I don't know. There's nothing on next week. There's only something on 918, and it's mostly skewed toward puts. Look at the put to call ratio. There's a lot more puts. There's only double the puts here, but there's more than 3 times the calls of here. See what I mean by 120,000 being, these are all bought way ahead of time. And then there's in January, there's some open interest. But all these expiries in between, there's nothing going on. So this makes me interested in, oh, well, they'll probably squeeze it next week, right? You would think. Do you think this is all retail? 354,000 calls, guys. 300, do you hear me correctly? 300, and Kitty squeezed it with 120,000. This is 6 months worth of data and people buying calls. This is ahead of time. This is people hedging. This is people blah, blah, blah. This is way ahead of time. There might be something going on there, some kind of move. There might be some kind of down move going into here, I would think, because it's mostly skewed toward puts. This is more skewed toward calls. So what do you think this is? Does that stick out at all to you? Well, let's dig into it. Let's just see. So moneyness. What is moneyness? In the money. I've never seen that. So I'm using this site for the bar chart. I'm trying to use a little bit, even though I don't really like them on X. But let's see here. So these are all getting tanked, right? Just obliterated. But why? Why? What happened the last 2 weeks, guys? Where were there a lot of strikes? There was a lot at 250. Guess what happened? They closed in the money at 250. Guess what that means? That's how big boys play. That's how they add shares at a cheap price. They buy derivatives. They buy like $2.50 or $2 calls, and they'll just exercise them. They don't care. So why did we magically close above 249 for 2 weeks in a row, and the price was up all week because they were buying, and then it pulled down on low volume, the lowest volume of the year, the lowest volume since 2025 on Friday. Why did it magically close at 250? So they can exercise their calls and get more shares. And at the same time, they're buying shares. They bought 250 million shares. And they just put out, why did they wait till Thursday and Friday to put out that they bought 250 million shares? They had 4 months to file that. They could have bought those shares anytime. Why did it just now come out this week? Probably because they have 420,000 in calls and they wanted to get retail on board by getting them excited too. They probably want you excited for next week, but they wanted to buy all their shares first. Probably because they're going to run the stock is what I would think. Now, you can have a lot of things with charts, but when you have strikes and volume and all this stuff, so where's the most volume? Let's look at this. 250 call is a $2 call, is where it's just as much as $3 call, right? And this is coming up for 821. And then 350 call is no joke, right? And then look at the puts. Do you see anything? Do you see anything that compares to this at all? I mean, this is just, they have to hedge. That's just standard hedging, right? They hedged into, like they made some money on the 250, you know. And they use this because when you're winding up for a squeeze, you swing. We've been swinging 70% up, 40% down, 40% up, 20% down. So while you're loading the boat, institutions, the stock is going way up and way down. So because they'll buy, and then they'll turn off their buy button and they'll let the stock come in. And then they'll buy puts because it'll fall. It'll just be lack of buying. It doesn't mean anybody's selling. And some people, you know, I know the AMC community think, oh, why is it falling when there's no sellers? Maybe there's just lack of buyers. Maybe somebody just bought a lot and then stopped. And, you know, but can you tell me, explain to me why you wouldn't run next week? That's what I just want to look at things backwards. Like, can you explain to me that retail bought 420,000 contracts for next week, 354 being calls and like almost no puts? Can you explain me that? Can you explain me how there's no other month that even comes within a third of this? Well, this does in January. So I would think you run up here, you maybe get some puts into here, and then you let this thing consolidate, maybe look at some calls in January. Just the way this is structured. So I would look at all things, and then I would look here and say, you know, just Tuesday, Wednesday, it showed that institutions own 240 million shares. And then we come into Friday, and now they own not only 499, but if you look, Barclays came in with some buys that just got filed over the weekend, 531 million total shares. That is 57% of the float that was bought and just doubled. So they owned, a few weeks ago on paper, the only thing we knew about, they owned about 29% of the float. Now, as of Thursday, Friday, there's not only 300 and some calls active, which represents what is that, another 35 million shares? But there's also, how many shares is that? 240 to 5? Yeah, that's 260 million. Well, 280 million shares were bought and put on paper the last 2 days, basically, right? So let's look at that. Let's see what I'm talking about. Let's put it by date. Yeah, let's just put it by date. Let's just go. Like, why? This is 8/14. This is Friday. Look at this. This is just Friday. That's Friday, right? Still Friday. And then look at Thursday. Look at that. Do you think there's a reason why? They know we follow everything, guys. They must do. Oh, there's Wednesday. Look at here. Here's Wednesday. So it kind of started, you know, I was telling you guys a few weeks ago, when this gets over 250, you're going to see they're going to buy everything. And then when it gets over 5, they're going to buy more. And that's just how they're limited, right? So what happened? Since I made that post, 260, 280 million shares were purchased. They ramped their stake from 29% to 57%. It's never been 57%. GME's never been 57%. In the high 30s was as high as AMC got, and then we released all the new shares. And this is with the new shares. So look at this. BlackRock, everybody's, you know, this is the past like week. It kind of started BlackRock on 8.7, and then it just went berserk. And somebody made a comment, and they said as soon as it's kind of usually a day after, where is it on here? So yeah, you got everybody, guys. Susquehanna, 0.72, all the good DE Shaw, all the ones. And what was there? Goldman Sachs, Charles Schwab, Citadel, Citadel bought 916,000 calls and 20 million shares. We got the filings on Friday. Yeah, Jane Street, Two Sigma. You guys know the name. They're all in. So there was a memo that went out that it's time, guys. We're just gonna run this thing, right? Redtech, Vanguard. Somebody said that usually the day after. Is it Vanguard? Yeah, the day after Vanguard. Usually a day or two after Vanguard SPY show up is when a stock moves. Well, Vanguard might own the most, guys. I'm not going to sit here and count them all, but they've got 30 million here, 20 million here. That's already like 50. That's already 30, 40, 50 million, right? They've got, if you just look here, there's 630. There's tons of Vanguards. There's another one here. There's like 50 Vanguards, and they already own 50 million here. I think they own the most. Like they own over 10% from what I see. And then everybody's talking about this Pentwater. Why did they dump? Well, just so you know, Pentwater plays with derivatives, and they might own 300,000 contracts. And they might have bought shares to hedge their contracts or something, or vice versa. They might have bought shares at $2 even and sold the shares at $2.50, and then now they have 100,000, 300,000 contracts or something, But yeah, they play games, and sometimes they owned exactly 9.99%, 63 million. Go do the math. Sometimes they buy for other people because Pentwater is known as they handle buyouts, mergers, and that's what they're known for. And a lot of time they could have bought the shares and transferred them to Ryan Cohen or another activist investor, charged them a premium for going in the market and acquiring the shares, and quietly like saying, here, Ryan Cohen or whoever, I'm not saying it's Ryan Cohen, but I'm just saying whoever, I bought you 63, I bought you exactly 9.99%. That's the most you can have without making it stink, right? And here, I got it for $2 a share. I'll sell it to you for $2.40. Or $2.50. Stock closed at $2.50 a share today. Here, just take them, pay me a premium on top of that for the work, and there you go. That's what they do. They go out and play games with stocks. And usually the stocks, they were involved with CAR, like I said, but usually they're up to something. They're in litigation, I think, for CAR. So maybe they were starting to squeeze here and they had to sell their shares to somebody. But this happened this week. We obviously didn't see it hit the market because I don't even think we traded more than 60 million this week. We had the lowest volume week of the year, I think. So anyway, this happened, yeah. And then, on the calls, this happened. And it's all for when? Right here. So either there's a bunch of institutions that just bought 260, that just doubled their stakes and then bought 400 and 350,000 call contracts for no reason, or something's got to give. Now, what is the number? What is the magic number on these? Here, I guess I'm going to go here. So what's the magic number? Well, 3. Looks at the biggest strike. 97,000 on 3. 97,000, right? So that's what do you multiply this by 100, I think, and then you get 9.7 million shares will convert, or they'll be active over 3, and then it goes onward and upward. So another thing is, guys, look at this. If we just look at this expiry here, and look how you've got calls 25 up to 7, 25,000. You've got 32 at 6. You've got 24 at 4 and 5. Let's just flip this up. Okay. There is no 5s and there's no 6s and 7s here. There's no volume. Why in the world would you say this is going to run on 828? Let's look at here. Where's the 5, 6, and 7s? Where's the volume? There's nothing. Why would you say it's going to run there? Because your chart? Because you don't feel it'll run this week? Okay. There's nothing here. 9/11, man. It makes me want to be out of the market 9/11. Yeah, after AMC runs, I don't know if I'll be in them. But look at this. Now this gets a little more interesting, but you have up to 7 again. Remember, it looked like they took 7s out for a few months there. And then you have some volume at 7s, right? But you don't have anything. This could be a second leg for AMC coming up in September, but I have to see how it shapes out on the charts. So I'm not going to buy September calls now. I'm going to doofus. But yeah, this is more interesting. In September, you could see a total 9-day difference. And then let's go to 10-2. Nothing. Nothing to nothing. 12-18. Nothing. Nothing. Yeah, anybody that's long AMC after September, good luck. If you think, oh, okay. Yeah, because every year AMC, now this is interesting. This is more, look, you got 10 strikes. You got 8,000 going on 10s. But you've got a lot. Now, here's the thing, is I want to see what this looks like. If we squeeze or do something next week, I want to see what this looks like after and going forward. So maybe I'll take a screenshot of this and save it and then look at it again after next week and just compare it. So there's not that many puts, but that's interesting. So we had what? We had 3 POIs, point of interest coming up on AMC. One is next week by far, just like if AMC does nothing next week, I guess all these institutions, their computers, they might as well close shop because they got it wrong. It's not us. I don't even see a lot of people saying AMC is going to squeeze next week or doing, let's just say run. But here's the story, guys. 354,000 for next week. Then nothing. Nothing. This is like nothing. 161,000 for 9/18. And then come into January. There's something. This could always be hedging, guys. Usually a lot of market makers, what they'll do is they'll buy a portion of current and they'll buy a portion of long-term to hedge. So just so you know, when it's a leap, they'll buy a portion of both. So they'll buy 50,000 of these and 50,000 of those. Just in case, like, the stock runs longer than they think, right? So they always have to hedge. And then they'll buy shares too, to hedge too. So just so you know, call open interest is 895,000 versus put. That's just the whole summary, right, of all these months. So I've never seen this many. AMC averages, around anywhere from 6,000 to 50, 80,000. 37,000 is pretty normal. Over 100,000 is pretty like, oh, okay, right? That's why you take note. But yeah, this is kind of normal, 63,000. But this and this is definitely not normal. These 2 dates, 8/21. So it's just another way to look at things. And if you don't look at this and look at that, and look at this, and you don't know how to chart, and you're just trying to get attention or whatever you're doing, and you don't do all your research, then you're the blind leading the blind. I do as much research as I can, and still, it's not easy. I have a good idea, and because we have this, does it mean it has to go crazy next week? Like I said, if it doesn't do anything next week, I would say there's a lot of, all these institutions have no clue what they're doing. And I'm pretty sure they have a clue what they're doing. I'm pretty sure they know exactly what they're doing. I'm pretty sure when they just double their share count, all of them, and it's every last name. It's not like one or the other or something. It's not like Citadel is, for 20 million. Citadel's never owned 20 million. I think they own 6 or 8 million at one point of AMC. They've never owned that, BlackRock's never owned 50 million. Whoever this is never owned 30 million. There's a bunch of new people. Barclays came in. They own 20 million. Look, right? 13 plus 9, that's basically 23 million. They came in the last thing. This one didn't. This is the one that just printed last, was these two Barclay orders. And Goldman Sachs, like everybody got the memo, guys, that AMC is running. And everybody grabbed as many shares as they could. So it looks like, doesn't it just look like that? Like they just all had a meeting and they said, all right, let's do this finally. I guess it's time. It does to me. And I'm not even going to show you a chart today. I'm not. I already have those. I went over those in the members video. I'm just showing you the underlying. This mixed with the chart is insanity. The chart is ready. It's been ready. The weekly's been broken out. The weekly chart's been broken out for 2 weeks, 3 weeks, like the indicators. That's why I'm saying, like, I can't not be bullish here. Like any time this thing could flip and just go. And looking at the open interest and all the buying coming in the last few days, well, I think any time just became, it's time. But anyway, guys, enjoy. Have a great weekend. Just wanted to go over something that's not a chart and show you that that this matters more than the chart. You could throw all your charts in the trash. You could even have a chart that looks like it's going straight to heck. And I did. There was a stock where I started buying some, a lithium stock last year, and I bought like 500 calls. And the chart just looked like AMC on Friday. Exactly like it was diving, and it had a good base, but all of a sudden now it's diving on Friday. And I was like, crap. And then guess what happened Monday? Trump comes out and says he's taking a stake in that company. Well, I bought it at like 280, and I had like $3 calls or $3.50 call, whatever it was. And the thing goes to 10. Right? And I posted, you guys have seen the trades on that. But yeah, like it's because this stuff happened. The institutions came in, and guess what the algos follow, guys? They follow flow. Like this is undeniable flow. I've never seen anything like it. I've never really seen anything like it, and especially in 2 days. And I've never watched anything as close as I'm watching AMC, but to see that come in 2 days, is like absolutely there. Is there a buyout or something? I mean, usually there's something. Is somebody going to announce like a huge stake? And it reminds me very much of Carr recently, and that stock went pretty nutty. So anyway, guys, have a good one. I'll see you next week.